How are you doing? This is David W. Williams, also known as Diamond Dave. And what we're going to go into really quickly is a basic analysis of Netflix. Just came out of earnings. I think there's some really interesting things going on with this particular stock. And what we're going to try to do is kind of forecast where we think that they're going to have to go in the future based on some of the weaknesses and some of the threats against their particular business model. Now, Netflix, we all pretty much know about them. They're a online platform. They're a content provider, right? And what they do is they provide content on a subscription-based service to their members. And what you do is you just pay a monthly. They buy content. They also have gotten into producing their own content, but they're essentially just a massive content platform that you pay a subscription service, and they're very broad as far as their offering. So they offer all types of content, from documentaries to movies, every different genre of movies. They even do comedy platforms. They're very, very broad. And so what they've come is essentially becoming like an all-in-one universe or galaxy of content. So pretty much whatever taste you have for content, Netflix is able to provide that taste. And kind of what they do is, and I've seen with people, is that on a Sunday, they cut on Netflix and they just pretty much watch shows all day, right? And that's kind of like, to me, their ideal customer. It's a person that wants to just sit back and veg out on shows. And one thing about Netflix is that I wouldn't say they invented it, but they made it very popular to where they would give you all the shows at one time, and you do what we call a Netflix blitz, where you just blitz all the shows for a particular series or a particular episode series all at one time. So let's say we drop 20 shows. Netflix would give you all 20 shows at one time, and you just sit there and you just watch all the shows. And that's kind of their model. Now, Netflix kind of had what we call like first mover advantage. So they were the first on-demand platform to really provide that particular type of offer, to make it really accessible to the public. And it wasn't really what I would call platform based. So you might have had it from like, you didn't have to just watch shows that were specific to a platform. So let's say you were paying for on demand for a particular network. You can only watch that shows. Netflix was very broad. And I think that was their value proposition. Their USP was that instead of you being niched into a very tight space, they were very broad. Now, one of the biggest challenges for Netflix is that they base their success on new subscribers. Netflix was able to pick up a lot of subscribers as a result of COVID. A lot of people were home. A lot of people were looking for something to do. And we're going to kind of talk about a little bit in this particular discussion how television is kind of a way for people to become distracted. And so as a result, we're seeing is that they picked up a lot of subscribers. So we're seeing, here's COVID, and then they started to move up really, really strong. And that movement was them hitting new highs historically for this stock. So we're seeing COVID right here around February, March of 2020. And then we just started seeing them moving up, right? And it was because their subscriber numbers and people's belief that they're going to become a more valuable company, because a lot of people were sheltered in. They didn't have anything to do except watch Netflix. And we understand that television is a very, very valuable distraction for people, but especially the American consumer. OK, and so that's one thing that a lot of Americans run to is television, and they use it as a way to kind of placate and satiate themselves against other things that are going on in their world. And it's really a way for them to become distracted against their real world. Right. So it becomes this kind of form of virtual reality. Now, Netflix just did a earnings that recently came out. Right. And so they were estimated to be 2.98. They put out 3.75, which really was a good earnings. But what a lot of people really were worried about is the fact that their subscriber numbers, right, didn't do what people thought they were going to do. So they beat on earnings and they beat on revenue. So normally you would think that's good, but they missed on subscriber expectations by around 2.2 million. And Netflix being a company where they don't justify their value from a shareholder standpoint on revenue and earnings. They justify by how many subs that we can pick up. And what's going to happen with any type of platform like this is kind of like, once everybody gets Netflix, well, then what do you do now? And essentially because Netflix is their core offer, I don't think they have any ancillary offers or horizontal offers. So once everybody gets Netflix, now what do you do? Now you can raise the price, right, and try to drive more revenue, but your subscriber numbers may stay the same. So when you make your success metric being subscriber numbers, it can become difficult because, like I said, once everybody gets Netflix, what do? And now you have to start worrying about attrition from other providers, because now that Netflix has substantiated that this is a very good business model, this on-demand content, Now that you have niche players like the Disneys and the other players where they have already shown to have success with their content, now they move on demand. And now Netflix has to worry about people may move from Netflix to these particular providers, right? So one of the things is that Netflix also is going to do a stock buyback, which also may drive up share price in 2021. They didn't necessarily talk about how long it was going to take. What we want to understand is that their core value proposition to their shareholders is that we're going to continue to increase subscriber numbers, right? So now what Netflix is doing now is, I think they pretty much figure we've canvassed the United States, and they've been doing this for a while, but they're moving more international, more global. Now, I think that's a smart idea. One of the biggest challenges that they're going to have is from an infrastructure standpoint. So we're talking about the United States, we're talking about Western Europe, Canada, what we call the Western world. We know that we have really, really good infrastructure for internet, but we also have good billing infrastructure. You go to other parts of the world, not only do they maybe not have the internet infrastructure to do video at a way in which it can really be viewable and be entertaining to their viewer, they also don't necessarily have billing. And that's something that a lot of people don't talk about. The ability to bill people through some type of online platform that is relatively seamless can be a challenge. So that type of infrastructure may not be built in, which can stop their reach. Even though the audience may be there, you have to have that infrastructure already built in so you can just hit the ground running. So that's what we want to look at when we're looking at Netflix. So when I'm looking at their chart, what I'm seeing is that since around late 2020, they've traded in a really, really tight range. And so what I'm seeing is almost between like 500 and 550 has been their range. So they've dipped a little under, they've gone a little over, but they traded in this range. So let me go ahead and let's do some basic supports, right? Let me get some colors out of here. Let's do some basic support. So I'm going to do a basic support around here. So that's one support. And then I'm going to do another one around here, right? So that's another support. And these lines aren't 100% straight, but they're decent. Okay, so let me do this. So these are the two support lines. So what I'm seeing is that they've traded pretty much here as a support around this 500. And then they also have another one around this 480. So what we saw was that after earnings, and I kind of felt this, I thought that they had kind of topped out and there was a good chance that they would drop. We saw them drop right after earnings, and they dropped pretty much down close to the support. And then they didn't really fall too much under, but we don't have a lot of trading activity there because we only got 3 days after earnings. What we're going to look for is that as they continue to move forward, are they going to get under this 500 line and then maybe start getting close to the 480, or are they going to just stay right in this range? But what we've seen is around since July, they've pretty much been in this range, right? 550 kind of being their resistance, 505 being one support, and then another support being around the 480. And that's what we want to look for. Right? I didn't mean to move that, my bad. So as we go farther out on this chart, where do we go? Right. So let me get rid of the draw. So after we go farther out on this chart, right, where does this price go? Does it stay within this range until we get some new news? Or does it go under and trade a little here? But like I said, as long as it bounces off to 480, we're still good. Or does it start moving north of 575 and get into some of this newer area? But we've seen just being kind of in this range. And there's nothing wrong with that. What we're looking at Netflix is we're looking at a company that has a lot of really, really strong institutional buy-in, right? And so what that's going to do, one thing is going to create a lot of stability on the price, and you're not necessarily going to see a lot of really, really big spikes. So we saw a lot of buy-in, right, after COVID. But then what we've seen recently is just it trading really, really, really in a very tight range. So we're looking at institutional ownership of Netflix. We're looking at around 80%. One thing that's going to do is going to create a lot of stability, and that's also going to create a really, really strong price floor, right? So as long as those institutions stay in this company, even if it sells off a little bit, it won't go under a certain price, because what the institutions will do is they'll just buy up any loose shares that because they have so much confidence in this company. As long as they don't feel like they're taking on too much risk by buying it up, they'll buy it up. And then another thing that'll happen is because they have so much strong institutional ownership, if Netflix ever dips, you're going to get the PR apparatus, the market-based PR apparatus. They're going to go out to retail. They're going to tell retail to buy it up. And a lot of times retail will buy it up because they feel like, hey, I'm getting this at quote unquote a discount, or I'm getting a deal. So the market-based PR apparatus, the media-based aspect of the market, they're going to really go out to retail and tell retail, Netflix is down 6% on the year. This is a good time for you to buy in. You can buy it in at a discount. The market's on sale, yada, yada, yada. And then what you'll see is a lot of times retail will come in and try to buy up a lot of that loose supply. So that's what you'll get. But you're seeing a lot of really strong ownership institutional wise of Netflix. And then you can kind of see Vanguard Capital, BlackRock. We know who BlackRock are. T. Rowe Price, right? FMR LLC. And so what I would do is I would look up these particular companies and try to figure out, who are they? What are they about? What do they normally own? And what do you think that their time horizon is to own this particular ticker or to be in this particular company? Because if Capital Research Global has a 10 or a 20 year horizon, it's very unlikely they'll sell unless something really, really outrageous happens with this company. So Netflix is kind of going to be judged on, can they add new subscribers? Now, the question we want to ask is that how do we think Netflix will do that? I personally think Netflix needs to go after a niche. I think them being this general broad-based content platform, I don't think that's going to work for them long term because they're going to be eaten up by niche platforms. So what we're seeing is that very niche-based platforms are going to start coming after them. And I think you're going to see a lot more niche-based platforms in the future where you're going to have on-demand platforms that are going to be just about one specific thing. And if you want to get that one specific thing, you're going to go to that platform and they're just going to feed you content on that. And I think you're going to see that type of content moving off the YouTubes and moving off things like that and just be based on a site where you're going to just get that kind of content. Also, I want to show you an article about Netflix moving more globally. So one of their biggest markets, and we're talking about, is going to probably be Africa. Biggest issue with Africa is going to, like I said, is going to be infrastructure and billing platforms. But Netflix, I was reading an article top of last year about how they're moving into Nigeria. They believe that's going to be a really, really big market for that. A lot of people are looking at Nigeria, not just for the video on demand, but also for the e-commerce because they got a very, very young population. And a lot of people believe that upward mobility is going to be a real thing in Africa. And they believe that young population is going to be moving into a particular spot where they're going to be a really, really good customer. So we can start getting them into the habit of utilizing our particular offer now. As they become a little bit older, it's going to be kind of native to them. So this article is talking about how Netflix is going into what we call formerly French colonized Africa, right? Even though they kind of started off in like West Africa, right? So they started off targeting English speaking countries. And now we're going into more of like the formerly French colonized parts of Africa. So this is a really good article from the Africa report. And Africa is going to be a really, really big consumer market over the next 50 to 100 years. And people may think, well, that's a long period of time. But that's how these kind of companies think. Their time horizons are 50 to 100 years, as the average person may be thinking about next week or next year. Right. So they're really thinking long term. Where is our new subscriber base going to come from? Because we pretty much saturated the Western market. So this is what we want to look for with Netflix. So they're going to be putting out another earnings. Let me see when that's going to be. We already had it. So Q2 earnings, I don't necessarily have the date right now. So they're going to be putting out another earnings. So what we want to look for, what I'm looking for with Netflix is that how is the market going to respond to their year-to-year comparable from a subscriber standpoint? And also, I think eventually revenue may be something that's going to kind of stand out year-to-year comparable, because we're going into a time of the year where, let's say this time last year, things were really picking up for them because of COVID, right? Well, how is that going to look to a comparable from this year? Because things may not be picking up as much as them, because a lot of people are going to be going back to their normal lifestyle. But again, I don't think this really falls too far up under their old school support, which is around this 480. I don't think Netflix is going to tank by any means. I just think they're going to have to try to figure out how to deal with a much more competitive environment. So now as a trader, you may want to look at a longer time horizon, right? There is a lot of day-to-day volatility in this range, but it can be, unless you really, really know this company, it can be hard for you to kind of understand how it trades. So you may want to look as a trader right now, but this be a suggestion. This is not investment or trading advice. Look at a longer time horizon, right? So what do we think the forecast of Netflix is, and from a 6 months to a year, and look at maybe leap contracts. But I currently don't think this stock is going to really sell off too hard unless some really, really terrible news comes out about it. because it has so much institutional backing. And a lot of times when you see what companies, they got really, really strong institutional backing, you can see a lot of stability unless the institutions decide to sell. And then that's when you're going to see a big, big move. And you'll see that probably in the dark pool prints and things of that nature. Because if you see dark pool prints of Netflix, it may not be likely that institutions are buying in. It may be very likely that institutions are getting out. Right. So that's the thing that you want to kind of look for. And that's if you really commit to studying this ticker on a really, really long-term, consistent basis. But I really like this company long-term. One thing I know is that one way in which we're going to kind of go into a different type of conversation. One way in which you can manage large groups of people is you give them really, really powerful distractions. So a really powerful distraction in the United States, literally going on almost 100 years now, is television. Netflix is just another version of television. And so what we have is a lot of Americans choose to placate themselves, satiate themselves, find comfort in watching video content. And that's just their thing. That's just what they're going to do. So we're never going to run out of a market for this. And we see that the market for this type of content provision is so big, right? And it's only going to get bigger as time goes on, because people are going to demand a larger and larger distraction because they're going to get desensitized to the last distraction. So this is very much an evergreen market. It's a very big market. It's only going to get bigger. It's a very long-term market. So I like the business that Netflix is in. I think they really understand the business that they are in. And what I want to try to find out is that what are they going to do to add in more subscribers? Are they going to become more niche focused? Are they going to try to figure out ways to keep you in their company, where how we extend the lifetime value of the company? Are they going to raise their price on their subscription service to try to drive in more revenue, even though you may get some attrition because of that? So what are they going to do to try to make sure that subscriber numbers look good, but at the same time, we don't take hits in revenue? And then I think also with them doing the stock buybacks, that can also create a bump in share price, kind of based on how they buy back some of that stock and how much they buy back and over what time period that they do it in. So this is going to be a really, really basic breakdown of Netflix. I would encourage you to look a lot more into this company and to kind of project where you think this company is going to be over the next 5 years. Right. But this is a legitimate, serious company. They understand their consumer. They understand how to add content. But like I said before, is that they built a really good model. However, it's a hard model to protect because of the consumer. So how do they build in some type of brand loyalty? I don't think you can build a moat around content. When I don't say content, I don't mean the actual content. I mean people's desire to get to content. So how do they build on some type of brand loyalty where people feel like Netflix is going to be my go-to place to get my content, as opposed to a YouTube or another platform at Disney, or even another platform, or even what I think is coming, which is going to be very, very small, micro, niche-based platforms that feed you a very specific type of content that you necessarily can't get from somewhere else, because they really, really understand that consumer. And I think that's the future of content creation. So this is David W. Williams. If you got any questions, hit me up in the comments. We'd really appreciate your feedback. If you want more of this type of content, let me know. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.